I'm Charlotte McLeod with the Investing News Network, and here today with me is John Ciampaglia, CEO of Sprott Asset Management. Thank you so much for being online with me today.
Thanks, great to be here, Charlotte.
Yeah, really excited to have this talk with you today. And of course, we're going to be going over what's going on in the uranium market. I'm going to start you off with a pretty broad question. We've been having quite a lot of excitement about the space over the last few months, a lot of it generated by the Sprott Trust. What do you think we need to see right now? Do you need to see some consolidation before we kind of keep going here?
Sure. Well, it's a sector that was in a very long, deep, protracted bear market for a long time. And it really did not have the intention of many investor segments. What we've seen in the last 12 months, I would say, are a renewal of interest across a number of different investor segments. And I would say that based on all the investors I've talked to over the last few months, it's still in the very early stages of interest. You said on an interview recently that one of your guests said that he thought the easy money was made. And I had a chuckle about that because I know the early investors in uranium would probably tell you the exact opposite. It was the hardest money to make because they were there in 2018 and 2019 when no one else was there. And it took a long time for their thesis to play out. And I think that thesis really started about a year ago in terms of showing some green shoots. And then the arrival of the Sprott Physical Uranium Trust, I think, helped act as a catalyst to ignite further interest in the market over the past 3 or 4 months.
Yeah, and looking forward to the rest of 2021, maybe you can give us some insight on what you think the Sprott buying will look like. I know that's really tied to investor interest, but what do you see going forward there?
Sure. Well, as I said, when we announced the acquisition of Uranium Participation Corp back at the end of April, it was a small number of different hedge funds that were, I'm going to call, early stage contrarian investors that were involved in uranium, not just the physical, but also the equities. But in the last few months, what we've seen is a broadening of interest. More generalist investors, retail investors right across the board. And I would say the interest has not just been North American centric, it's been global. We just finished a multi-day roadshow, a virtual roadshow, and we had calls basically from morning till night because we were talking to different investors in Europe, and then we would toggle over to North America and then finish with Asia at night. So there's a lot of interest in the category, and as I said, I think it's a function of the uranium market finally coming back to life after a very long bear market, and I think it's realization across a number of commodities that the energy transition is not going to be bump free. And we're seeing that right now in a few markets. Yes, the price of uranium is up 40 or 50% in the last few months, but it's not just uranium that's had this pop. Natural gas prices have tripled in Europe. We're seeing coal prices around the world spike. So it's not just uranium that's catching a little bit of this bid right now. The transition away from fossil fuels, as I said, is not going to be bump free, and we're clearly hitting a few bumps in the road right now as things like renewable forms of energy, which are always going to receive lots of support, have some weaknesses. And one of the primary weaknesses is around intermittency. So when the wind is not blowing as much as the models say it will, and you have to fire up natural gas plants, and there's a supply squeeze, the price can triple. And I think we're seeing a number of different energy markets respond accordingly in the last few months.
Right. And speaking about where the interest in uranium is coming from, I was watching your presentation at the recent Red Cloud event, and you mentioned that there are people looking at this sector who normally wouldn't be looking at commodities at all, really. So maybe you could talk a little bit about that. I found that really interesting and how it connects to these other things that you've been mentioning.
Sure. Well, I think the world has really moved away from value investing and contrarian investing for a very long time, because with a backdrop of very cheap and easy monetary policy, growth and momentum investing has really been the flavor of the day. And that's happened for many years now. So being a contrarian investor is not an easy thing to do. And investing in uranium and uranium equities over the past few years has been a very strong contrarian decision for many investors. So now, as markets start to recover and more investors discover what the fundamentals of a market are and what the supply demand dynamics look like for a commodity, I think you get people starting to poke around in the sector again. And I would say that based on the discussions I've had over the last couple of months in particular, we've spoken to a number of different institutions that said to us, we were invested in uranium in the last cycle. And when I say last cycle, I'm talking about close to 15 years ago. And it was very easy to ignore since then, but it's starting to get our interest again. And we're starting to do research and diligence on the Sprott Physical Uranium Trust. And that to me is a really good sign. It doesn't mean they're all going to come rushing back in, but the uranium market is not a very big market compared to, say, the oil and gas market and other commodity markets. So it doesn't take a lot of capital to come from the generalist pool of capital to make kind of a ripple in the uranium market.
Right. And so now we have some idea of why people are getting more interested in the uranium story. Maybe we can talk more specifically about the attention that the Sprott Physical Uranium Trust is getting, which is quite a lot of attention. Do you think that's due to the fact that it's a vehicle that's taking supply off the market? Is it to do with, it's taking some of the opaqueness out of this industry? Mm-hmm. What are you seeing there?
Sure. Well, I'll go back a couple steps to our acquisition of Uranium Participation Corp. And Sprott as a company manages about $14 billion US in these commodity stockpiling funds or trusts. So we have a long history of managing them. We have a lot of experience managing them. And over the years, you accumulate 250,000 clients and you gain a lot of knowledge around what commodity investors are interested in. And so I think we've taken a lot of that know-how and experience and we put it into the re-engineering of UPC into the new Sprott Physical Uranium Trust. So we did a number of things that we thought were going to be very well received by investors. And I'll just give you a few examples. So first of all, we added a US dollar purchase option. And you might say, well, why is that relevant? This is a fund listed on the TSX. And that's correct. But the reality is there's a large capital pool of investors in the US, and many of the investors in the Sprott Physical Uranium Trust are actually based in the US. So that just was something to give them the opportunity to invest in their home currency. We added a daily net asset value. So every night at around 7 p.m. Eastern, we actually publish what the net asset value of the trust is. We show the pounds of uranium that it holds. We show the market value, the cash position in the fund. And that transparency, I think, brings a lot to what you said, a very opaque market. As an investor, how do you even get the price of uranium on a screen or just to go to any search engine or financial website? And the answer is it's very difficult. Many of the uranium pricing services are actually paid services. So you need to subscribe to get a price of uranium. So I think the trust acts as a really good proxy for what the spot uranium market is doing every day. That transparency, I think, helps the fund trade more efficiently in terms of its net asset value, market value, gives investors the confidence to understand and the knowledge to understand exactly what does the trust hold every day, what's it doing, and that transparency we've received great feedback on. Prior, the predecessor vehicle will provide this information once a month. So we think this is a huge step improvement. What it also allows us to do is operate something called an at-the-market offering, or ATM for short. And this allows us to issue new units accretively to the trust when it's trading at a premium to the prior day net asset value. So this mechanism allows us to, allows investors to, if they're interested in investing in physical uranium, they can buy units of the trust on the market. And there's a chance that the units that they're buying are actually a newly minted primary share versus a secondary share. So instead of buying shares from an existing investor, you may be buying a share unbeknownst to you from one of our underwriters. And those underwriters basically send the net proceeds to the trust, and then the trust acquires more physical uranium. So we implemented this at the market offering on August 17th. And within a couple of weeks, it started to pick up as people understood how it worked. And we've issued about $700 million US since that time a new unit. So the trust, when we acquired it, was about 630 million US dollars in value. And now we're about 1.6 billion. So the interest has been tremendous. And what we've done with all that capital is obviously bought more uranium. So when we acquired the assets of UPC, there was approximately 18 million pounds of U3O8 or yellow cake. And that stockpile now is well through 34 million pounds. I think that's 34.5 million. So we've bought a lot of material in the spot market. That's helped to provide price discovery in the spot market, activity and liquidity, which market participants universally will tell you was kind of lacking for a long time. So all of this activity by the trust, I think, is giving the marketplace a lot more confidence and information about price formation in the uranium market.
Right, and this transparency is obviously in contrast to what typically goes on in the market. For example, the utilities are another major source of demand. I wondered if you could give any thoughts that you might have on what they are doing right now, although of course it's tricky to ask that question when it's so hard to get information.
Yeah, well, it's not very tricky when they're calling you and trying to find out what's happened to the uranium market the last couple of months. So I would say that after summer holidays, the pickup in calls we received from utilities definitely amplified. And I think a lot of them are trying to figure out exactly how the uranium market has changed, and not just because of the Sprott Trust, but I think even prior to that, it was building. So I think a lot of utilities are looking at the uranium market right now, trying to figure exactly how this vehicle works. Is it going to sequester material for perpetuity in perpetuity? Does it have some kind of end game in terms of will they be able to buy the uranium from the trust? And we've been very clear with people that the trust is a stockpiling fund. It's not a market trading or timing vehicle. The material is not available for sale or loan, and the uranium belongs to the investors, and we're the stewards of it. So it's interesting that they're all trying to figure out how the landscape has changed. And the reality is in the uranium market, it's not a just-in-time supply chain. You don't run a power plant expecting the next truck to pull up and bring your fuel to the plant. They buy uranium years in advance on multi-year contracts. And I think that's what the market is really looking for now, is how is that buying behavior through that term contract market? How is it going to start to change given what the investment community is doing and saying in terms of expressing their interest in physical uranium, and the fact that the price of uranium is kind of moved up from $30 to around $43 in the last couple of months. But I would argue that even at $43, we're a long way off from where the market needs to go to reset itself. And what I mean by that specifically is that there's a lot of shut-in production. If you look at the two largest producers in the world, they have mines either curtailed production or shut-in production. And as a miner, and it's the last thing you want to do is shut your production in, because that's your cash flow lifeline. But if you are selling uranium at a price that's below your cost of production, it doesn't make any sense to pull it out of the ground. You might as well just leave it there. And that's exactly what the likes of Cameco and Kazatomprom and Kazakhstan have done. It just shut the material in. So as a power plant, you have to kind of ask yourself, this is a critical element for me to run my plant. The plant runs 92% of the time. And the security of supply and the price at which you can contract to buy this uranium is critical. So everyone is looking for, this new contract cycle. When is it going to pick up? Where are these deals going to get done in terms of term and price? And everyone's looking for these signals in terms of where the longer term price of uranium is going to drift to.
Right, and we hear all the time these discussions about the incentive price for production to come back online. How does that fit into what you've been talking about here?
Sure. So I think this is a really good point, because if you're a miner and you've basically put a mine on care and maintenance, and so it's shut, it's turned off. You maintain it so that it doesn't flood or whatever, but it's not operational. You sent all the workers home. So you need to basically figure out, when do you turn it back on? And you're going to turn it back on when you can sell those pounds of uranium at a price that reflects the cost to start the mine again, reflects obviously a profit margin for its shareholders. And that's a tricky exercise. And the other reality is you just can't, it's not like an oil pipeline where you just turn something on and off. It could take, 18 to 24 months to restaff and train and get equipment back to a location. In many cases, these are remote locations. So this is the tricky thing about, the price will go up, and it will have a bearing on that decision to turn production that's been shut in back on. And so a lot of people say, okay, those tier one assets that have been shut in, what's the incentive price that might have to happen, or might have to reach before they'll turn on production? And I don't know what the number is, but it's clearly not $42 or $43 or $50, because if it was any of those levels, they probably would have made announcements by now. So that's the big question: is what's the price? Where does the price have to go, where the companies have the confidence to basically renegotiate new contracts with utilities to secure a home for those pounds that will come out of the ground in, say, 2 years from now or 3 years from now, and so on. So it's a really interesting dynamic that's not common to a lot of other commodities, given the long lead time to buy uranium.
Right. And one thing I've kind of been thinking about is, how this would play out. Is there any advantage to, being the first company to turn things back on, or it doesn't really matter? It's more about your deals with the utilities and things like that.
Yeah, so every mine has a different cost structure and a different cost curve. So each company will figure out, okay, what's the economic price here where I can confidently turn the mine back on, but and also how much do I need to pre-sell forward? Meaning, how much do I have to sell through contracts to make sure that the pounds have a home? And I think, the uranium producers have taken a lot of pain shutting in this production. And so I don't think they want to just turn the production back on without knowing it's got a home at a certain price. So some of it will be sold in with different formulas and pricing mechanisms, but at the end of the day, some of it needs to be pre-purchased by utilities before they can confidently resume those operations.
Right. And just to look a little bit at the big picture here, you've talked a little bit about changing attitudes toward nuclear. I wonder if there are particular countries in the world that we should be watching that may be leading this charge toward kind of a new energy future.
Yeah, sure. I think that's a really important point of the story here. I mean, uranium and nuclear are highly polarizing topics. Can't deny that. And this is really a function of nuclear weapons, the accident at Chernobyl and the accident at Fukushima. So it just naturally scares people. The reality is that nuclear has an incredibly safe operating history. If you look at its track record relative to the other ways we produce energy, the most dangerous form is coal. And if you think about coal, most people will probably be shocked to know that almost 40% of the world's electricity is still generated using coal. It's obviously not safe to mine. It's very dirty. And the world obviously needs to move away from coal if it has any chance of reducing greenhouse gas emissions and all of these different climate accords and agreements that countries are trying to achieve. So there's a really big push by the nuclear industry to say, hey, we have to be part of the solution here because this is zero greenhouse gas emitting. Renewables are always going to get policy and financial support from different governments, but there are limitations, as I mentioned, about intermittency. And there are other land use issues related to renewables as well that people, I think, sometimes glaze over. So nuclear, I think the point is it's not the savior here, but it has to be part of the mix. And I think more and more governments and scientists are openly saying this, and that's something that hasn't happened before. I'll give you some examples just this year. So if you look at the Biden administration, they've been very supportive of nuclear already. And nuclear has always been kind of a pro-Republican position. And so I think getting bipartisan support in the US out of the Biden administration, the early announcements they've made around infrastructure support and financial support is a really good sign. In the state of Illinois, the government there just extended financial support to 2 Exelon reactors, which were at risk of being closed. So there's another good example of government stepping in and saying, hey, we just can't turn these plants off because what will happen is you got to fire up natural gas plants, which is what's happened in Europe right now. The wind isn't blowing as much, and the only way to generate that gap in energy is to fire up natural gas plants, which everyone is trying to move away from. So I think there's a realization in Europe that renewables cannot be 100% relied on. I would say the UK in the last week or so has made a pretty big announcement about building another large-scale reactor, as well as supporting small modular reactors. France in the last week or two has announced a big financial package to support the development of small modular reactors, which we think could be a real game changer over time for a lot of smaller cities. France has always been very pro-nuclear. Most of their energy comes from nuclear. And then if we shift on the other side to Japan, Japan's had most of its reactors turned off since the Fukushima accident. But the new prime minister is signaling that the only way they're going to hit their greenhouse gas reduction targets is to get 30 reactors back online, which is, they're still a far way off from that goal. So I think governments are now publicly saying, even though it's polarizing to some of their constituency, there's no way we're going to hit our greenhouse gas targets without having some mix, including nuclear. So I think all of those things are very supportive.
Right. And it really does sound like things are going well. As we wrap up here, though, I do think it's worth noting whether there are any points of caution that you would offer to investors moving forward in the uranium market.
Sure. Well, I think one thing is about doing your homework and educating yourself. I mean, we're very, and this is why I do these kind of interviews, because education is the key, and it's the starting point. You need to understand what you're investing your money in. You need to understand the investment funds that you're participating in. So I think thing one is get educated. Thing two is I always tell people is have realistic expectations. These things take time to play out. It's a long-term story here that we're advocating here. This is not just kind of a to the moon kind of thing. So be realistic about your expectations and do your homework, I think is probably the best advice I give most investors.
Okay, well, thank you so much for coming on to talk about uranium. It was great to get your thoughts.
Thanks for having me. Appreciate it.
Of course, and once again, I'm Charlotte McLeod with the Investing News Network.